Cool. Skylar, we just wrapped it up with Wojciech. That was fun. It was, I think the big thing that he really highlighted with the digital asset treasuries, the DATCOs, if you will, is just the future of them, where it's right now these assets or these companies are just accumulating these assets, whether it's Bitcoin, Ethereum, whatever. What he's doing is taking other businesses to use that to buy these assets as opposed to just taking out debt, which is
Right.
kind of a new take on this, which is cool. Then we get into AI and other things.
Yeah, no, it's exciting. I think, to the point, like where's the DATCO sit in the marketplace with other products? Just highlighting, from his point of view as a tech company, really, how do they stay resilient and as the markets move going forward? And then obviously the AI narrative always it's interesting. That was a good conversation about his experience with drone technology and robotics and how he sees the market evolving in real time. So that's pretty interesting as well.
Yeah, for sure. We see, what they're doing in AI. He's got a couple different businesses. We talk lately on banking, DeFi, tokenization. We get into a lot. It's a fun conversation.
Yeah.
I think the big point with like the DATCOs is really just where the puck is moving, and I think he's got a good perspective on that. It's not just the by using debt is, I think that game's coming to an end if it's not already ended.
Yeah, at least minimizing it substantially going forward. Yeah, I think to your point, he has a good pulse on the market, where things are going for sure.
Cool. Well, without further ado, let's get into it. Thank you for tuning into the All Funds Network podcast. My name is Mike Schroeder. Today I'm joined by my co-host Steinke, and we are also joined by Wojciech Kaszycki. Wojciech is the CSO of Europe's largest DATCO, the BTCS SA. Did I pronounce that right, Wojciech?
Yes, correct. Thank you for inviting me. It's a pleasure to be here.
Absolutely. Pleasure to have you on the show. Maybe let's start off. Tell us a little bit about BTCS. What are you guys working on right now? What are obviously you guys are DATCO. What are some of the other business lines and things you guys are thinking about right now?
With pleasure. So BTCS, which stands for Bitcoin on Steroids, is a publicly listed company in Warsaw New Connect market and Frankfurt. Our ticker is BTF because we are better than ETF in terms of the returns for the investors, and that's our goal, to be always better than ETF. And we initially started the company, the activity in this space, because I'm a big believer in two independent, people may say, directions which now the blockchain space is heading to. Which one is stablecoins and moving from old, banking system, banking rails into the stablecoins for money movement, also including cross-border. And the second one is the tokenization of the assets, starting from the public-private credit tokenization and so on, which brings a lot of liquidity to the space. And because there is no public entity in Warsaw, which provides professional services, advisory, also validation and so on for the markets, we decided to build one. And that's how it happened that BTCS came to the life. We convinced market leaders from around the world in both spaces, in BTCFi and also in tokenization, to join us. We finalized the first round of financing. That's how we started our treasury. We are already in top 100 of the BTC treasuries. We also provide already two validators. First one is for Guardrails network, which is BTCFi. And second one is for Z Chain, which is a tokenization platform, compliant tokenization platform, which we believe will have its presence for years in the market. We are working on other validators as well, but those two are now up and running and provide services and generate yield for our company. And that's it. If you want to ask, like in few words, what the BTCS is. So it's a Web3 professional services company running validation nodes for supported blockchains in order to spread the word about the tokenization and stablecoins to the public and private companies in Europe.
So you're both a infrastructure builder and a treasury manager, would you say, both sides from that
Correct.
perspective?
So basically, if you will look at this from a different angle, most of the novel blockchain networks are built in the delegated proof of stake kind of the consensus mechanism, which means that if you want to run a validator, you have to have a stake. And that's the mix. That's what caused us to run both. So I don't believe in passive DAT companies. I mean, the companies who just buy Bitcoin or buy some assets and just hold and hope what will happen. We believe that DAT, digital asset treasury companies, are the same companies like any other company. I mean, it has to generate profit for its investors, right? If you will compare active digital asset treasury company, you can compare it, for example, even to what Apple is doing, right? I mean, they sit on a bench of cash, right? But they are constantly improving. They are providing new devices to the market. They are providing new software systems to the market. And you can say that basically this balance sheet gives them like a power in the space and gives them the possibility to negotiate better prices so they can be highly profitable, providing consumer services to the market. So I believe that this is the same way that digital asset treasury companies should go, but the difference is that we don't sit on fiat cash, we sit on the digital assets. Why? Because we believe that fiat cash will always downgrade. And basically for us, keeping a treasury in digital assets, in Bitcoin mostly, but also other coins which support Bitcoin and help us generate additional yield.
That makes sense. I guess going back to the kind of the both sides of the things from running validator nodes, does that ever conflict with the treasury yield objectives, or are they both pretty symbiotic?
They are totally symbiotic. Basically, running validator means that you need to be better than others. You need to put a lot of attention on the security. You need to put a lot of attention of the network, of the service, of the technical equipment, not just the software, right? In the same moment, building digital asset treasury supports the validator because you have a stake. I mean, the validator has a higher stake within the group of validators, which means that he is ranked higher and he gets more yield from validating the transaction. So basically, this is very symbiotic. I cannot imagine a validator service running also with the foreign treasury. Why? Because then it's very easy to make this validator not running properly. Imagine you are running the validator and someone just pulls out the treasury. So basically the validator does not have a stake and you stop validating. That's why you should always have your own stake as well. That's why it's symbiotic.
Got it. Absolutely. So I guess the active approach for you guys is really about having those other businesses that support growing the treasury as opposed to actively trading Bitcoin, right?
To be honest, running the company in general, it's like imagine you are the gardener and you have a garden, right? So every day you wake up, you go to the garden and you look at the garden, it's beautiful, you think what can be done better, right? If you properly manage the company and treasury is the part of the company, every day you just think what can be done better, how we can move those assets which we have in the possession at work so we can generate more yield in a safe way. So this is like a natural behavior, right? I mean, the company is set up to bring value for the investors. It doesn't matter what kind of the company it is. And the role of the management board and the role of the board of directors is to support this movement. I mean, to do everything what is possible to generate yield out of the treasury in order to generate more value for the investor. Sometimes it's investing in different products. Sometimes it's developing some different services. Sometimes it's looking at the assets and thinking what else can be done with those assets to bring more value.
For sure.
Yeah, that makes a lot of sense. So I guess kind of going back to the, many public treasury companies historically follow the MicroStrategy model, right? The passive model. And you're kind of arguing that the passive treasuries aren't really sustainable for long-term shareholder value, potentially. What's your thoughts of in a flat market or bear market, what mechanisms make an active treasury resilient in these times?
So first of all, we already see, and this is coming out of the speeches of Saylor, that MicroStrategy or strategy today is also thinking about activating the treasury, right? I mean, they are going into kind of the public-private credit facilitization, and this is a proper behavior. This is right movement. Of course, I mean, if everything will go green, Bitcoin will skyrocket whatsoever, even those passive treasury companies will generate value. How? Because they will be worth more than initial value when the investors bought the shares. But this is not enough, because if we will look at this from that perspective, we will see that those passive treasury companies do not differ much from the ETFs, right? I mean, if you want just the exposure on the price, I mean, you buy ETF. Why you are buying a digital asset treasury company shares, which does not have only the treasury, but also within the company you have costs. You have management board, you have accounting. You have those companies have to cover cost of the public listing, public filings, and so on and so on. So basically, this model is not sustainable. That's why most of the digital asset treasury companies, which are today passive, they are thinking about going into the active mode. If they will not do that, the question is how they will survive, right? Because I believe that sooner or later, there will be a movement where those companies will start to merge. And of course, the company with a stronger balance sheet will be the one who will be probably and potentially buying the shares of the company with the less strong, I would say, right, the balance sheet, right? So this is the proper direction. But just to mention also what is very important to say that digital asset treasury companies after strategy, let's not put strategy to the basket because it's a totally different beast. It's the oldest DAT on the market. They were born on a kind of the FOMO, which started not last year, but even in the previous year. And this FOMO was about mass adoption. So basically the Wall Street saw, okay, what if we will put the digital assets into the treasury of the company, and instead of trading digital asset, we can trade the public stock, right? So that's how it started, that's how it happened. And it's not the bad thing. The thing is that people were looking at it as the short-term investment. They were not realizing that digital asset treasury is it's a little bit different organism. I mean, it needs 2 to 3 to 4 even years to prove the validity, because as you know, Bitcoin sometimes can go down even 60%. We had such history in the past, right? So today we are in the worst moment because most of those treasuries, they were buying Bitcoins where it was on top, between $100,000 to $124,000. Now we have 69,000, right? So they are like at the half, so basically 50% below the water. But people do not realize that this is virtual loss for now. This will be like a technical loss or real loss once they will sell the Bitcoin. That's why if the company has enough funds, they have activity, which can cover their day-to-day operations, they are active treasury, it doesn't matter for them. Because basically they have constant flow of the money to support the current operations, to wait for the moment when the price will go eventually up, right? When the company is just looking at the passive treasury, and unfortunately a lot of companies were financing the treasury purchases from loans, there is a problem, right? Because most probably in multiple cases there is like a margin call for the loan, and then the company has to do the sell-off of their treasury. We saw already a few examples on the market like this.
Yeah, that's always seemed like the approach, just kind of buy, leverage up, hope the price keeps going up. So I I think what you guys are doing in the active side makes a lot of sense in terms of
Hope is not the best
building more of a
advisor
real
here, so.
business.
Absolutely. Just curious, Wojciech, what are regulators? I mean, specifically, I guess the European regulation, they're often viewed as both a challenge and an advantage. How does being a publicly listed DATCO, shape your ability to build infrastructure and attract institutional capital based on, I think it's Warsaw's market you're based on?
Yeah. So it's like this, that when you run public companies, doesn't matter whether it's digital asset treasury or any company, you have to be transparent. And basically there is a lot of regulations that you need to follow. So that makes a little bit harder to do the business because you are exposed. You have to expose your models, your techniques whatsoever to the market. So it's easier for the competition to jump in. But from another angle, it's easier for you to attract the capital, and it's easier for you to attract the customers, because being publicly listed company gives you an advantage that people trust more such companies than just private companies, right? So basically, there is always a leverage. What's better, being public and unfortunately exposed, but having easy access to the capital and to the customers, or being private where you hide everything, but to be honest, you are like, I'm one of those 1,000 companies which do not differ much one from the another. So we decided to be the public. And now the question is, what do you promote? Because if you will just promote digital asset treasury, that you are building a treasury, the regulator may ask whether you are not a cooperative investment scheme, right? Which is a license activity. So it's very important to understand that we are a technology company. Our main goal is to provide technology services, validators, help with implementing blockchain, but we need to have this digital asset treasury because it does support our validators. Without that, we would be at a huge risk, which I explained earlier, and that's why we need to keep both. And if you will be transparent and clear enough as I'm now, you have no issues with the regulator. But if you will just start promoting, I am issuing shares, and for the shares I'm buying the bitcoins, and I just keep the bitcoins and whatsoever, the regulator might ask why you do not have a license. This is license activity. This is a fund, right? Some kind of, okay?
Yep.
So that's first thing. And as you know, even strategy has some potential, let's say, rumors about some regulator asking whether they are not an investment scheme, or whether they should not be licensed. So this is something that is a public entity, especially in the digital asset treasury space. We need to keep an eye on, and it's very important to be very compliant within the space. Second thing is, in general, crypto assets, not just in Europe, also in US and in the whole world, they are going mainstream. By going mainstream, it also means that the regulators keep an eye on it, and policymakers create more rules. I mean, they want to frame digital assets in the old school traditional finance model to be sure that they can assure the retail investors that they will not lose money, or somehow like this, right? And this is also an issue for the digital asset treasury companies, because it's important to be very concerned about what you do. So digital asset treasury companies should not provide digital asset services for third parties. That's why what we do, we just buy on our own balance sheet. We do not advise customers. We do not provide any information about the potential price behavior or whatever else, because we don't want to be seen as a kind of the licensed entity, or entity who should have a license, for example, to provide like a market advisor services or whatsoever. So this is like not just for Europe, this is for the whole world. I mean, if you do something, you need to know the constraints. You need to know how to stay compliant within your scope of activities. And this is very important for us. That's why if you look even on the supervisory board of BTCS SA, you will notice that there are two lawyers within the supervisory board, quite known in terms of their advisory services for digital asset space. So basically, it's very important for us also to stay compliant and to make sure that the money of our investors will not be somehow in trouble if a regulator will start claiming that we are doing the license activity.
Makes sense. Yeah, better to be safe than sorry. With Wojciech, tell us about just like your market outlook. What have I don't know, what have you seen for the last couple months? We're recording this in early March. Markets, altcoins have went down very significantly. Bitcoin's down, I don't know, like you said, about 50% from its all-time high. Kind of, what's happened the last couple months, and kind of talk to us about your outlook as we move it further into 2026.
So basically, first of all, no one has a crystal ball, right? I mean, so those are only assumptions. This is my, let's say, view on the market, not the BTCS view, or this is not a market advice as well. But if you will look at what happens on the market, you will see that basically from the all-time high, long-term investors were selling. So were downgrading their positions in terms of the Bitcoins, right? It was because of many reasons. One, let's say, most important reason was the liquidity. After the US government shut down and other things which happened in the space, the liquidity available on the market was going down. And if you will compare the total liquidity available on the market to the price of the Bitcoin for the last 4 years even, you will see that Bitcoin may be called a kind of the KPI or indicator for liquidity. When there is more liquidity on the market, the Bitcoin price goes up. When there is there's lowering of the liquidity on the market, the Bitcoin goes faster down. And this is like a correlation which I found and which I saw just analyzing the charts and analyzing the portfolio of the long-term holders. Now, if you will look at, if I'm right, and you will look at this from this perspective, you will notice that on the charts, those long-term holders stopped selling. So basically, there is not so much pressure on selling the Bitcoins, which we saw when there was like a side of some easing between the US, Israel, and Iran war. The price of the Bitcoin went up from 60 something to 70 something, right? So basically we see that not much is needed to bring the price up again. But of course, those long-term sellers stopped selling now, but they can start continuing it in the future as well, right? I mean, as I said, we don't have the crystal ball. But I am bullish. I believe that 60K something was like a bottom. That's my belief, right? And I believe that now the price will be like in the corridor. You know, the Bitcoins have to go from the one hands to the stronger hands and so on. And then I expect that the price may climb up even to 150 by the end of the year. I mean, as I said, this is my personal view, not a market advisor of any sense, but that's what I would expect for the price of the Bitcoin to form. So my goal is like 150 end of the year.
Yeah, definitely. It's I mean, it makes sense too, especially with a lot of the I don't know, historical whales. I mean, some of these people have accumulated hundreds or even thousands in some case of Bitcoin. Especially, I mean, it's market's been going on for more than a decade now, where it's probably a huge portion of these people's net worth, their assets. So it's time to just diversify.
Yeah. And we have a new player who is entering the market, and we don't know how it will start moving the market, because now AI is growing so fast, especially AI agents which work independently of the user, right? And in my opinion, we will see a movement where those AI agents will be exposed with more and more and more power from their users, and basically they will have to keep some kind of the funds in order to complete some tasks on behalf of the users, right? I do not perceive them to hold fiat accounts, because I believe that a lot has to change in the banking space for AI agents to be able to hold fiat accounts and pay, for example, I don't know, for groceries or whatever else. But I strongly believe that they can be equipped with some kind of the digital wallets, like even Bitcoin wallets or stablecoin wallets or whatever else. And we will see that. And imagine if I'm right and this movement will go up, and what will happen if 50 million agents will be given even 0.01 Bitcoins to hold and to spend for potential purchases, right? So there is a lot of happening within the space. No one knows in which direction it will go. But what I'm saying is that there is no crystal ball, but everything can happen, everything is possible. If you will look at I did that as well, if you will look at the last 4 years, what were the expectations of the analysts and what happened with the Bitcoin then, there were only few who provided the proper insights, right? All of the others were wrong, because it's all about the market. I mean, you cannot invent the market. The market is here, and the people decide in which direction it will go. And sometimes there is like a small thing which can happen to the market, which can be brought as a news or whatever else, and the price can go into totally opposite way. But this combination, stablecoins plus tokenized assets, which bring liquidity to the traditional markets which were illiquid, plus AI agents, which can very fast play a role of the market participants of those two, let's say, markets which I explained, like tokenized assets and stablecoins, can make another wave of price increase. We just don't know when.
For sure. Actually, AI agents is kind of a fun topic. What do you see as kind of like the, lowest hanging fruit? What are some of the things that you could see AI agents interacting and buying, selling, trading? What do you kind of see there?
To be honest, there are already products as AI agents which you can buy that trade on decentralized exchanges, right? I mean, it's not something that, it's not a future, it's already here, right? And
Right.
unfortunately, currently, they are still stupid enough, quote unquote, to be, fully independent and make real money, right? But they are being trained very fast. So I have, I'm also the owner of Mobilon, which is a neobank. And basically, we have talks with our IT team. And I had a talk with them in the beginning of the week. I told them, guys, in 2 years, you will not remember your tasks or your work model how it is today. It will be totally different. And I told them, each of you have to develop 3-4 different AI agents, junior developers, and you will supervise them. And those agents, those developers have to perform the tasks. Your role is now not to code. Your role is to supervise AI agents to code, right? And this is the same in every market. I mean, if you will look at the recent information from Anthropic, right? I mean, their Claude can code better than multiple engineers, can do the market analysis, can provide Excel sheets, can provide teasers, whatever you want. And basically with their ability to have like a bigger contest, to be honest, it starts going into the direction when they really can be independent in terms of the providing outcome from the jobs, from the work they received. The point is that the person still be needed to supervise it and to judge somehow whether the tasks were completed in a proper way. But unfortunately, it's not a future, it's already here. Or you will start implementing those AI agents within the services that you have at your company, or someone else will do it, and unfortunately, you will lose the edge.
Yeah, I mean, it's definitely a kind of a novel concept, right? To your point, they're already here. It's like a digital employee. You're hiring, you're trying to supervise them, giving them guardrails of what they need to do from a work perspective. But to your point, we need guardrails overseeing them.
I remember it was 1996 or something like this when the internet started to go mainstream, and I recall in Poland. We were trying to sell websites, for the companies, and we had a lot of calls and a lot of meetings where people were saying, "But I don't need the website. I have the yellow pages, the yellow book. My phone number is there, right?" It's just 20 years later, there is no yellow books. There is no phone books, right? Those yellow pages in the phone books. There is no phone books even. You use iPhone or whatever else. So this shows us how quickly the technology can take over. So I compare today in AI space with something what happened in 1996. I mean, some people do not realize, but there is a dinner, and or you are someone who eats the food, or you will be the food, and the question is where you want to be, right?
That's right. Absolutely.
What are you guys doing with AI agents? Are you guys have you guys started using OpenClaw, like different tools like that?
So basically, we don't use OpenClaw. We are testing a lot. We believe, we are IT company. So for us, it's a little bit more like checking what's best. So we found that for us, the best is OpenAI, like Codex. We connected via MCP with Perplexity, for example, for search, with some other, tools that we use at the company, like Jira, Confluence, or whatsoever. So Codex is the main executor of the tasks, but it uses like RAG, it uses different other tools to be kept within the boundaries that we want to set up. And unfortunately, when you run AI agents, you have to put a lot of effort to keep them within the track. So basically things like Sentry, full telemetry, checking exactly what he provided by the real human at this stage it's very needed. And I compare it to the junior software developer. You know, when we hire someone just after the university, it behaves in the same way. And I'm telling my people, you need to keep an eye exactly the same way on AI agent as you would keep an eye to the fresh employee who just came to the office, you know? I mean, you teach him, you don't give him like a big task on the beginning. You start smaller, you try to understand how he behaves. People tend to, you know, overwork the AI agent. So they receive like a Codex or Claude or whatever, and they want to invent the full-fledged application done usually by 50 people. Of course, it will not work, right? But you can see that you can start with simpler applications, simpler tasks, which are boring usually for the tech developers, like writing documentation, doing tests, doing code review, and so on. At the end of the day, you will find out that if those AI agents as developers, they are maintained properly and they are supervised properly, they really behave properly. So all the keys to the real outcome from employing the AI agent is just enough time spent by the supervisor to understand how the agent behaves and how to support by proper prompt and proper configuration his tasks. And the same is in the digital asset treasury companies. AI agents are currently being used for multiple purposes, like, for example, checking the status of the validators, checking the chains for the transactions, you know, doing portfolio analysis. There is multiple things which are currently being done by the DAT companies, which can be handled easily by AI agents. It's coming.
Yeah, it's pretty fascinating where it's all going, right?
Yeah.
We even see a lot of folks that are hiring developers that now are requiring AI expertise.
Of course.
Because being able to do the code review and all that, to your point, is very crucial.
Yeah, correct.
That's very exciting. That's great. A couple questions. One, I guess from a market narrative perspective, Wojciech, I mean, around crypto ETPs or ETFs, you kind of mentioned that earlier on, and institutional products. I mean, these are all evolving. Where do you see regulated treasuries like BTCS sitting relative to ETFs and tokenized yield products in the capital markets going forward?
So ETFs, ETNs, ETPs, it's like a different kind of the product because it's fully regulated. In order to issue such a product, you need to go through the prospectus, you need to go through the approval process from SEC and so on. So this is like a product that mostly is served as a exposure, as a passive exposure to, let's say, a qualified investor. He knows exactly what he wants, right? He wants exposure. The whole thing about the strategy is on his shoulder, so he knows what he's doing. That's why ETFs or similar products are for. Treasury companies serve a little bit different purpose because, as I said, they are not just an indicator of the price. They are not just following the price. They should, and they will, all of them in the future, provide additional services, and they should grow faster than underlying assets. So basically, it should be, like I said, Bitcoin on steroids, kind of the product, right? Additionally, imagine that something new comes to the market tomorrow, right? I mean, it will not be possible to issue ETF tomorrow. So if some class of the investors is looking for the exposure to the novel which comes with digital asset space, ETF, CTP cannot be used for that. That's the space for the digital asset treasury companies. We can decide tomorrow that we are doing new issuance, and this will be related to AI token or something very similar, right? So basically, we are faster and closer to the market with all the good things and bad things, because sometimes we may choose wrongly. We may invest in a token which will not skyrocket or something like this. But this is a decision of the investor. There are different investors. They are the one who wants just to follow the price. They want to have like a passive exposure to the digital asset treasury price. And they are the ones who believe that this is the next big thing. And they want to invest in some piece of product that grows faster. And digital asset treasuries are exactly for that purpose. That's why I believe that it will grow. It's the same like if you would ask why there are publicly listed gold mines, right? Because someone can just buy the gold, right? But if you have the gold mines, it means you have a lot of gold inside. So basically, you grow faster than the market because it's you provide additional services with refining the gold or whatever else, right? So it's a very similar strategy with digital asset treasury companies. Just very new beast on the market, right? I mean, besides
I think that's
strategy.
that's really the key point. I mean, to your like what you're saying here is there's really no point beyond an ETF for a lot of these digital asset companies where it's like really these companies over time will start to find new business models.
Of
I think
course.
like what you guys are doing is really smart is because staking is, I mean, it's so tied to digital assets and it's yield. It's a perfect business
100%.
for that company to be running. I have three other things I kind of want to touch on: DeFi lightly, tokenization, and maybe on the banking side too. But let's start with DeFi. What are you guys doing in terms of DeFi?
So we believe that DeFi is a space which is still non-regulated. There is still some kind of the thinking process in the policymaker side, how to regulate DeFi. But in my opinion, DeFi is a perfect solution for multiple use cases that are coming to the market. And DeFi is very connected with the tokenization. I will give you an example. I mean, today, if you are a young person, you would like to buy a flat or house or whatever, you're exposed to the mortgages market. Usually, banks ask you bring like 20% of your own funds. Then we will give you the rest as a long-term loan, and you have your flat, and this is collateral. And basically, you pay it back for 10, 20, 30 years, depending on the terms, right? And in such a situation, this young person becomes like a slave, quote unquote, of the financial system because he had to put 20% in front and then for 10, 20, 30 years, he just needs to pay it back. The flat is his, but in reality, it's not his because it's like a collateral for the loan. If he will stop paying the loan, I mean, the bank will just liquidate the position and sell his flat, right? So we believe that it's very common with cash advance business, by the way, right? I mean, there are some traditional finance techniques and businesses which are a great example how they can be brought to the DeFi and tokenization space with a lot of added value, right? Another example which we are exploring as well is the possibility to do the crowdfunding. Because if you will look at the crowdfunding platforms, which are regulated, and there is a law in Europe, probably the same in different parts of the world, those are like DeFi, like DeFi platforms, right? They in general, they help people to finance their businesses, and the money are deposited or provided by other people. So there are rules, there are collateralization schemes, and so on. We believe that those two, let's say, things. So first of all, those crowdfunding possibilities, plus mortgages, plus public-private debt, are to be put on the DeFi plus tokenization platforms in the near future. The only problem is with oracles, because let's imagine we want to do decentralized mortgage system, right? I mean, it has to be fully collateralized. So we would need to have a kind of the oracle which can provide almost real-time price for a given flat, right? Because you need to have like a collateral. So this is not yet there. This is like a still field that needs to be developed, and this is like something that stops people from using DeFi for such kind of the lending. But if you will look at amount of money which is in traditional finance, you will see that the biggest position is debt. Mortgage is also a debt, but from the private people owning who wants to owns the flat, right? So if we will find a way for these oracles, for live price feeds of different asset classes, we will see what's the potential of bringing this part of the business of traditional business, traditional finance on chain. So that's why I'm saying that stablecoins and tokenization is the next revolution which will happen in a blockchain space. But as there wouldn't be blockchain without the internet, there is no tokenization without popularity of stablecoins. I mean, this is all connected. That's why we started with internet, then we started with blockchain. Now we have like those stablecoins, Genius Act, MiCA in Europe, and then we will have like a boom for tokenization of different asset classes.
And the bank side of things too, that's interesting to me. So what do you guys banking sector seems to be changing rapidly. We have regulation coming in the US. It seems like there's issues around yield for these stable coins, but we don't need to get into that too much. But just curious, like what are you seeing on like the banking
Yeah.
side and how this is evolving?
So basically, the problem is how the banking is structured now, right? So we have this frictional reserve. What it means? It means that for the banks to be able to finance credit actions, they need to have deposits from the users. Without without deposits, there is no credit facility. So it's not possible for banks to earn any money. And the biggest problem for them is that they think that those deposits will be taken over by another entities, and that's like the point of discussion now, within even Senate or within some other institutions in European Union or some other places, right? So banking is one of the most regulated part of our economy, because they are like the source, they are like a provider of the liquidity to each other part of the economy, right? So that's why it's slow. It cannot be like just invented some new solution during the night and put into the force, because it may destroy as well the whole other areas of our economy. I believe that banks, they do not want to lose the market. I believe that policymakers started to understand that they can no longer fight with digital assets, that they have to adopt it. And that's why there is a movement now of creating policies which can provide banks with some tools or abilities to serve the digital asset space. And it's a good thing, because, if you will ask some exchanges or some different companies in the space, always the biggest pain point for them was a good banking rails. So if the banks will come to the market and they will be able to provide a reliable rails for the crypto space, for the digital asset space, other companies will benefit, and they will always find the place for themselves, because banks in general are infrastructure for economy. They are not developed. They are not skilled enough in terms of the even size of the organization to be the fastest on the market. There will be still fintechs. There will be still some other companies which provide some novelty to the market, and they will be using banks as an infrastructure for rails, maybe for custody in the future. I mean, today banks they provide custody for fiat. They can provide custody for crypto, for digital asset space as well, right? In one of my companies, Mobilum, we have also an insurance company. So we see how quickly the insurance business is developing. Traditional insurance based on chain, but also insurers and underwriters are looking how to fill some gaps within insurance space for the crypto space, for digital asset space as well, right? So banking and insurance will have like a new breath, new life now, with the possibility of them to jump into the digital asset space. And I'm really looking forward to it. I believe it's a very good idea to allow them to serve like a purpose, to be this infrastructure for liquidity provisioning and for the digital asset space in general.
Yeah. Yeah. This is good. This is good. This is interesting. We've covered a lot here. Is there any other topics that you think would be fun to talk about we haven't covered yet?
I believe that there is plenty of topics that we can discuss, but I don't know whether if we will put everything into
What?
one, people
Oh
will
yeah,
people
yeah, yeah.
people
It's
will
all
get
good.
lost.
We want to be respectful of your time. Anything in the market? I mean, you're touching a lot of different businesses. Anything in the market that you're really excited about right now?
So I believe that AI will change totally the market. We just don't know how, right? And I believe that there is another market which is not yet tokenized, which is not yet fully AI blown or driven and so on, which is defense tech, right? I mean, different
Sorry, what is it?
defense tech, like
Defense tech.
companies who build drones or, you know, some systems to check whether this is the person it claims to be. And I'm not talking about the KYC, I'm talking about the real-time recognition. There is plenty of businesses here. Combination of AI with the robotics, for example, combination of AI with defense tech systems. This is totally a different space. People are very bullish about AI, and everybody are saying that AI was the fastest growing industry for the last 3 years, which is totally not true. If you will put to the same chart defense companies, you will see that they grown twice much faster, you know, and this is like another angle. We are just not talking about that, right? Because it's more, you know, related to the NATO or to the you know, to the dual use, I would say, right? Not using some words which shouldn't be used here, right? So this is another space, and I believe that we will see new use cases which we cannot even imagine now with the growth of those technologies. So. You know, I mean, every half a year when we will be meeting and discussing, I believe that there will be something new that we were not even aware previously that may happen. I'm one of the owners of the drone company that we bootstrapped in Poland a few years ago. And the idea of the company was a business angel. I just helped them finance the whole operations. They wanted to provide the drones for fire departments to check whether there is like a potential fire in the trees in the forest area, right? And that was the use case. But you know, after what's happening in the world, this company moved from this use case to be full-blown dual-use defense tech institution, I would say, right? Still, what the purpose, what it was built for, is there, and still there are fire departments that use the technology and so on. But if you will ask the funds who are coming and asking if they put the ticket, all of them are exploring whether there is like a dual-use potential. And 5 years ago, we had no even idea about that. We were living in a different world. I mean, the only war was between, you know, some small countries somewhere. We couldn't even find it on the globe, right? Now we see that 1/4 of the world is, you know, under fire. It's Russia, Ukraine tensions plus what's happening in the Middle East, right? So it's a totally different time now.
Yeah, it's pretty fascinating to see that how fast everything's grown. To your point, you know, drones, robotics, AI, you know, agents training their own agents, as an example, or robots training their own,
of course,
drone, do different things or tasks. So it definitely it's moving pretty quick for sure.
Yeah. And if you will look, I don't know whether you know some movies like Terminator or Matrix, the movie, or some other science fiction. I was speaking with my son a few days ago, and I told him, look, I mean, some of those ideas, they are not science fiction anymore. I mean, this is the reality. So if those people who provided, who developed those stories are really able to, you know, predict what will happen in the future, maybe in the future we will not use computers like now to speak to each other. Maybe we will have some holograms or something else, you know? I mean, the future is unpredictable. Our goal is to be there and to bring the novelty to our investors, and that's what each company should be doing. So every day we wake up, we're thinking, what can we do better? How we can move those assets at work, you know, so they provide additional value, they provide additional yield, which we can use to buy another asset in order to do the same. And we are living in a very, I would say, remarkable times. And I believe that in the future we will look at this history and we will see how quickly it was developed.
Totally agree. Absolutely.
100%. Awesome. Well, Wojciech, this has been a lot of fun. Really appreciate you sharing your insights with us. Where could people go to connect with you? Where do you want to send people? You got a couple different websites here, but where can we send people?
So basically, the best way is to go to btcs.com.pl. This is like our main page. You can also find our shares on Interactive Brokers. The ticker is BTF. on multiple venues. If you will put our ticker, you will find it out. Trading, you can put BTF also, you will find it out. So the btcs.com.pl is a good entry point because we publish a lot of news, a lot of information about the company, and you have contacts to us. You can ask the questions. We are here to respond.
That's great. Well, this has been a great conversation, Wojciech. We'll make sure to put all your content in the show notes, and thank you for sharing your insight.